Today, we're diving into one of the most talked about topics in the mortgage world: fixed versus variable rate mortgages. It's a decision nearly every homeowner will face, and the way you make this decision may surprise you. In fact, 99% of people approach it the wrong way. We'll cover how to choose between the two options, what to do when fixed rates are cheaper than variable rates, and the hidden risk and reward tied to each. We'll also talk about how your personal financial profile, risk tolerance, and even your relationship dynamics should influence your decision. And at the end, I'll point you to 3 videos that dig deeper into the science, psychology, and strategy behind the mortgage choice. My name is Justin Chose from the Financial Mortgage Group, and if you're looking to thrive financially and make smart mortgage decisions, you're in the right place. Hit the like button and subscribe for weekly insights. So let's jump in. Don't time the market. Understand yourself first. Choosing between a fixed and variable rate mortgage isn't about guessing where interest rates are headed. It's about you, your comfort level, your goals, and your ability to sleep at night. Think of it like investing. A variable rate is like buying high growth stock. A fixed rate is like choosing government bonds. Each has its place, but the best choice depends on the personal risk tolerance. Most people, well, they try to time the market. They grab fixed rates when they think rates are going to go up and go variable when they think rates are going to fall. But this often backfires. Remember those who locked into fixed rates in 2021 and 2022? Well, many are feeling good now, but they didn't know the future. They had a low risk tolerance and chose accordingly. If you're in a relationship, base your mortgage decision based off the more conservative partner's comfort level. One lying awake at night worrying about payments isn't worth it. Financial stress can do more damage than a slightly higher rate. To give you an example, one couple we worked with in Niagara were first-time home buyers with 2 young children. The husband leaned towards the variable rate because of the potential savings, but his wife was visibly uncomfortable with the thought of payments changing. We helped them secure a short-term fixed-rate mortgage with a lender that allowed an early exit. That gave them the peace of mind and flexibility to reassess when their family's finances stabilize. If you're someone who prefers stability and predictability, a fixed-rate mortgage might be right for you. But not all fixed-rate mortgages are created equal. Here's the most important thing to remember: get a full-featured mortgage, not a discounted one. Full-featured fixed-rate mortgages allow you to refinance if rates drop in the future, and that's a huge advantage. Avoid big banks for fixed-rate mortgages. I know that sounds shocking, I know, but banks typically impose massive payout penalties if you want to break your mortgage and get into a better rate. That could cost you thousands. Instead, look at what we call A++ lenders: MCAP, First National, and CMLS. These lenders often require stronger credit profiles than the big banks, but in return, they offer low penalties and more flexible options. Also, avoid the dreaded bona fide sales clause. This clause prevents you from breaking your mortgage unless you sell your home. It's a trap that limits your future financial flexibility. We actually recently had a client that took a 5-year fixed-rate mortgage with a bank and didn't realize they were locked into a bona fide sales clause. A year later, when rates dropped and he wanted to refinance, the only way out was to sell his home. His situation could have been avoided with a better lender and clearer advice. And if you're going variable, here's what you need to know. Variable rates aren't one size fits all either. There's 2 types: variables with fixed payments, variables with adjustable payments. Always go with an adjustable payment. And why? Because you'll feel the impact of the interest rate changes immediately. This keeps you financially aware and prevents long-term surprises. If you lock in with a fixed payment on a variable rate, your amortization could balloon without you realizing it, especially in a rising interest rate environment. If you must go with a big bank, Scotiabank is the only one that offers adjustable payment variable rate mortgages. Otherwise, the A++ lenders are your best bet once again. My wife and I personally hold a variable rate mortgage with an adjustable payment. It's a strategy that makes the most sense for us and the most of our clients who understand and accept the risk. One of our clients, an entrepreneur, chose variable with adjustable payments and set up a monthly automatic savings transfer to buffer against future rate hike. He was comfortable with the volatility because he had a plan and understood the math. So what do you do when fixed rates are cheaper than variable? This is where things get interesting. When the yield curve inverts, that is, when short-term fixed rates are lower than variable rates, it might make more sense to choose a shorter-term fixed rate, typically a 2 or a 3-year term. Right now, for example, fixed rates around 4.29% are cheaper than variable rates that could be sitting around 4.5%. Many clients are opting for shorter terms around the 4.6 0.669% mark to ride out the current rate environment with more certainty. We will call this the variable equivalent fixed rate strategy. You're not locking into a 5-year, you're just buying time. We personally used this approach in 2016 when it made more financial sense. Just remember, this is still about you. Don't make the choice purely based on rate charts. Choose what aligns with your financial plan. So we're going to compare the pros and the cons, and let's break it down. Fixed rate pros: stable payments, long-term predictability, peace of mind, especially for couples with different risk levels, easy to budget for long-term goals, lower emotional stress in volatile market. The fixed cons: higher penalties for breaking, typically more expensive over time. You might miss out on lower interest rates if markets drop, less flexibility if life circumstances changes. Now let's talk variable pros. Historically lower cost, lower penalties, often 3 months interest. Rates drop automatically when the Bank of Canada cuts, more financial stability over the term. Variable rate cons: payments can increase, financial anxiety if you're not prepared. Not suitable for those who want payment predictability. Requires careful budgeting and attention to rate changes. One important insight: fixed rates are also adjustable. It's just that they adjust every 5 years instead of whenever the Bank of Canada moves. So one of the key things is don't get tricked by hindsight. Everyone loves to say they saw it coming when rates rise, but very few admit when they are wrong. Trying to time the market is risky. It's far better to choose based on your personality and plan. And here's the truth: the math, the science, and historical data all show that variable rate tends to outperform fixed rates over time, even during periods of rising interest rates. We've helped dozens of clients through rate cycles. Those who stuck to a strategy based on risk tolerance, not emotion, came out ahead. One retired couple in Welland opted for a variable rate on a rental property, but had their broker monitor interest rates and notify them if locking in made sense. That kind of partnership and awareness makes the difference. But, and this is crucial, if you have the right mindset and the right mortgage product to make the variable strategy work. So what should you do right now? Reflect on your comfort level with risk. If you choose fixed, go full featured with flexible payout terms. If you choose variable, use adjustable payments. Avoid the big bank penalties. Don't try to time the market. Build your plan around your goals and your lifestyle. Work with a mortgage professional who explains the fine print, not just the rate. If you want a deeper dive into this topic, I've linked 3 videos: science behind fixed rates and variables, why you shouldn't choose a fixed rate mortgage, and also why you shouldn't choose a variable rate mortgage. By watching all 3, you'll have clarity you need to make the right choice for your next mortgage. Again, I'm Justin Chaussee from the Chaussee Mortgage Group, and if this video helped, please subscribe for more insight. Let's make smarter mortgage decisions together.